Imran Khan has so many things to share with us. We're going to move through it quickly because of all the different roles that he's played and the role he's playing right now. But let's start with a survey.
We're going to start with a polling question. So everybody get out your phones, Bloomberg STYT into your browser and click live polling. So here's the question. How much shopping will you be doing on Amazon in the future? All in on Amazon? A mix of Amazon and others, ready for an Amazon alternative, and you're headed back to brick or mortar. So let's see. Well, this is good for you, Imran. So a mix of Amazon and others. So tell us a little bit about what you're doing at Verishop. Because do you think about Amazon constantly when you're thinking about strategy for you guys?
I fundamentally believe that one company cannot solve all problems. And I think if you look at e-commerce right now, is 10% of overall retail sales. And there's a funny story. In 2004, I was a research analyst, and I went to see Netflix. And Reed Hastings told us that when he reached 7.5% penetration in the Bay Area, first Blockbuster was shut down. And he told us that when I get to 7.5 to 10% penetration nationally, the Blockbuster will go out of business. And that exactly happened. And then in advertising business, when Google and Facebook got 10% of digital ad dollar, we saw an accelerated disruption. And now digital advertising is 40% of all advertising. And if you look at online retail, is now 10% of overall retail sales. So I believe that in next 10 to 15 years, online retail will be 30% of it. So we're going to see accelerated depreciation because this 7.5 to 10% is the magic number when things start really falling apart.
And so how do you capture that slice of it? You've been doing this, you've been live for just a few months now. What are you learning about the marketplace that maybe you didn't know going into it?
Yeah, I think in marketplace, what's really missing is a lifestyle e-commerce destination. Right? So if you need your commodity disposable utility product, Amazon is phenomenal. And if you need your luxury product, like you want to buy Gucci bag or Louis Vuitton bag that you buy once a year, or you are a 0.1% of world's population, that's all you buy, you have a great relationship with those very expensive brands. But for your everyday luxury, let me ask you this. How many of you, the clothes that you're wearing, you bought from Amazon? Maybe one. I know, it's two. So really, think about it, for your everyday luxury product, for everyday lifestyle product, there is no real destination to go. You go to either brick and mortar stores or you go to this boutique place. And that's also happening at a time that we're seeing explosion of direct-to-consumer brands, right? Everybody is building direct-to-consumer brands. So there is no place for consumers to go find, discover new brands. Find the brands they love and discover new brands. So we are creating a brand discovery platform where you can find all the cool brands for your everyday luxury and with the convenience of Amazon. We now have the fastest free online shipping in the marketplace, free one-day shipping. We put our customer support number on the top so that if you want to call, you can talk to our customers. And I read every customer support emails. And so we really stand for convenience, we stand for quality, and we stand for discovery.
So cool brands, is it all high-end?
I would call them everyday luxury, price points somewhere starting from $75 to $750.
What's to prevent somebody from going to your site, saying, okay, I like this XYZ cool brand, and then going to the home site for that brand in the future? And
some people will do that, The interesting thing is that consumers don't like putting their credit card number in 500 different websites, right? So if you have a relationship with one retailer who knows you and your product shows up, that's a great place to do. The second thing is the convenience, right? So because we aggregate product, we can do the delivery, like free one-day shipping, free return, 24/7 customer support, all those things that you can't get anywhere. And then the third, we're bringing a lot of exclusive brand partnerships and things like that. So the really thing is that what we want to be, I fundamentally believe for every YouTube where you can go find everything, even like horrible thing like people committing suicide, you need the world of Netflix. Right? Yeah. And Amazon, where you can go find everything, they build the world's largest flea market, you need a premium lifestyle e-commerce destination where you can discover cool brands. And we want to build the discovery platform and the browsing experience.
One of the ways that you are sort of grabbing share, it seems, is through influencers. That is well known to a lot of the influencers in this room. What have you learned about them? Because it's not so easy to identify the right people, to figure out the right, essentially, business model around that.
And
how have you cracked that code?
And it's not inexpensive sometimes.
Yeah, we're not doing that much with influencers. To be completely honest with you, I have a philosophy is do completely opposite what the world is doing.
Yeah.
You know, if you look at in New York City, you will see our outdoor campaign in the taxi top, or if you take the subway, you will see it on Verishop brand train. You know, I think, so fundamentally, I believe that consumers are smart, and they understand the authenticity, you know, and the thing is that if influencers are too commercial and they're promoting too much of the product, I think it doesn't convert very well. So you really, really have to understand that when you engage with the influencers, is an authentic relationship. Because I think you really, really have to appreciate that if you push your product in an inauthentic way, it's actually a huge turnoff for consumers.
Right.
Because consumers know that you're trying to dupe them, right? You know, when we started the company, we call it Verishop. And what is Verishop? Verified shop. Because we wanted to build trust. You know, the world is going from fake news to fake people to fake product. And we wanted to build this trusted platform. And so you want to do marketing, that you want to engage in a marketing in a trusted way.
And is it right, 1 million shoppers, or not yet, by the end of the year?
We have a free one-day shipping right now.
But no, in terms of the number of shoppers that are on your site right now?
Oh yeah, I think by year end, we'll have 1 million unique shoppers on a monthly basis.
And
All right, so
we need to switch gears.
Yeah, we got to switch gears. We got to move fast. When you talk about turnoffs, one of the biggest turnoffs it feels like for the market this year and for a lot of people was WeWork. You've got some thoughts on this. You've been watching this market as a banker, as an executive, as an entrepreneur. What happened? What went wrong as you distill it down with WeWork?
The one word is corporate greed, right? I think the key thing is whenever we give someone money, you give them your trust. It is a fundamental thing that people don't appreciate, that when an investor, or forget about investor, your friend or your parents or your uncle or an investors give you money, they give you the trust. And when you take that money, you have a responsibility. You have a responsibility to live by the trust they give it to you. And I think oftentimes we saw that the corporate executives don't appreciate the trust that investors give it to them. And at WeWork, we saw the gross negligence of that trust. And
You're talking about Adam Newman.
Yeah, executive level, yes. And the corporate greed is to a level that fundamentally I didn't see since the world of 1999, 2000.
Well, what about the role of SoftBank in this, right? The big investor, obviously, in WeWork. And what about the role of investment bankers, certainly, when they tried to take it public? And obviously, all of a sudden, all these issues came out.
Yeah, you know, I think...
Or responsibility of investment bankers.
So two different questions. You know, I think SoftBank, as an investor, you have to make two decisions, right? One, you have to analyze the investment as a standalone investment opportunity. And we can argue whether WeWork was a good investment or a bad investment from an investment lens perspective. But what SoftBank, and as an investor, you always have to trust the management and you give them the money.
Yeah.
And if they don't follow through it, you know, I think it's very difficult for an investor. So I actually sympathize with SoftBank. I know everybody blames SoftBank, but I actually sympathize with SoftBank because they gave money to someone who completely turned around and didn't respect their trust. And with regards to investment bank, look, I think, you know, clearly investment bank could have higher standard of due diligence, but you know, the good news is they did the due diligence and they disclosed all this information,
but
and that's
so
how
late,
we found
it feels
out.
Like. Do you feel like it was too late in the process? I mean, this was a company that was around for a while.
I think investment banks, they couldn't have disclosed it before the filing anyway, because the company would not let them disclose it.
Right.
So
when you think about it through your banker lens, your research analyst lens, one of the moments where we seem to be is this exploration of private markets versus public markets when it comes to valuations, when it comes to when money gets put in, who makes the money in a lot of ways. You saw this in some ways at your job at Snap, sort of that ride. What do you make of where we are at this moment, and what's it going to take to maybe fix this chasm, as it were, between private valuations and public valuations? Or is it working the way it's supposed to?
I think, I think the private market, the valuation is arguably, you can argue that in many cases are inflated, not always, many cases, but, I think I can see why investors like it, right? Because you don't have to worry about day-to-day volatility, No, the challenge with the public market, is the market is so volatile, and investors are so short-term oriented, and the people who are giving allocation to those investors are so short-term oriented that every little piece of news, moves the stock every day, and that creates challenges. So I think if you want to build a business for a long term and want to make a long-term decisions, to be honest with you, it's very difficult to do that in public market these days. So I think I understand the excitement around private market. But saying that, a lot of great companies were built in the public market. Amazon went public very early, Netflix went public very early, But I think it's getting more and more challenging. And the thing is that also a lot of the funds are getting really, really big, that they're not really interested in a small and mid-cap names anymore. So that creates a lot of challenges as well.
Imran, when you look at 2020, I know one of the themes that we've identified certainly for the year ahead is going to be what happens with big technology and the techlash that we've seen. What are your expectations? And should some of these companies, whether it's Amazon, whether it's Google, whether it's Facebook, should they be broken up in your view?
I think, my personal view, it's un-American to break up a company just because they're big, right? That is completely opposite of capitalism, and I think that just saying that a company is big and we need to break it up, in my view, a person who is an immigrant to this country, it's un-American. Saying that if these companies are engaged in a situation where they violated clear law, which I'm not aware of, if they violated the law, then obviously, I think regulators should look into it and take action against it, whatever the right course of action it is.
Well, and so let's talk about specifically the digital ad market in many ways. This is something that you watch from a number, again, of different angles, including in your role as Chief Strategy Officer at Snap. What did you learn about that market specifically that maybe applies to the broader tech world? And what did you learn at Snap that you're applying?
I think, look, at Snap, when I started building the ad business in January 2015, we had zero revenue. And by the time I left, we did almost $1.6 billion annualized revenue. And so I think, and we did that in 4 years. So I think, if you can build an audience and if you can recruit great team, I think you can build a business very fast. I still believe that there is an opportunity to build big businesses. Look, I'm not trying to defend anybody, but when Amazon came along, Walmart was really big, right? And before, when Facebook came along, Google was really big. Before Google, Microsoft was really big, and they're still big. Yeah. So I think that the disruption is happening at such a rapid pace. There's 10% of the e-commerce market going to become 40%, or the cloud computing penetration will go so significantly. There's still room for build businesses, So I don't think, targeting anybody because they became successful, I just fundamentally don't believe that. I think that's a very cynical view of the world, and we need to be more, have a more positivity about that. But again, if somebody broke any law, which I'm not aware of, obviously we should look into it and take action against it.
If you were wearing your investment banker hat right now and there was a technology that you'd want to invest in, or that when you look at the landscape, whether it's AI, whether it's robotics, what have you, or maybe something that we're not really talking about enough, where would you put your money?
I would invest in my business.
Okay, Verishop first, and then second.
No, look, I actually think,
Well done.
I actually, think that there's a lot of talk about AI. There's a lot of really, really smart people are working on AI. There's a lot of talk about self-driving, and these people are actually smarter than me, and I cannot really go figure those things out. But I look at e-commerce, retail, it seems like most underrated opportunity, because if you really believe that 7.5 to 10% is the number where you see accelerated disruption, why wouldn't you go to online commerce?
And so what's the biggest threat then for your business and for the broader sort of e-commerce, for that growth rate? What do you worry the most about maybe not from a competitive standpoint, but from a more existential standpoint?
I think the market will go to 30 to 40%. Whether we will be successful or not, that will depend on can we execute, right? And so I think with our strategies right, are we executing right? So that's only, so I would say it depends on the team, but overall the market, where the market is going, I feel very, very confident that that's where the world. Look, I went to the Nordstrom yesterday, this big 57th Street Nordstrom.
We just talked with Eric.
And after that, my personal 2 cents, I was like,
Really?
I know media love it, but
I'll connect you with Eric Nordstrom, and you guys can have a good conversation. What competitor do you most admire and why?
What competitors? Look, I wouldn't say necessarily competitors, but look, I think, like what Microsoft has done recently, really, Satya has done a really amazing job, turning around the business. I think Amazon continued to impress me what they're doing, and full disclosure, I own personally share of Amazon and Microsoft, so I don't want to feel like pitching my books here. But I think there are a lot of great companies that continue to execute, and a lot of small companies that continue to execute.
All right, we're going to use this for an upcoming edition of Business Week Talks, and so when we have someone like you with us, another question we like to ask is best advice, and this will be our last question. What's the best advice a mentor or a boss or someone has ever given you to sort of give the people something to think about when they go out to lunch?
Be patient. And as you can see, I like to speak fast, talk fast, do everything fast. And when I was 24 years old, my boss gave me advice that, hey, be patient. And as I look at a lot of the millennial audience, and actually I was in a conference and I was listening to BlackRock president. He was talking that how millennials come, they want promotion in 6 months, and 2 years later they want his job. And I think in life sometimes you got to be patient,
right,
and work really hard, and everything works out.
That's a great final note. Imran, thank you so much.
Thank you.
Imran
Thanks
Khan,
for having me.
everybody.
Thank you.
Thank you.